All right, welcome back to a different type of video. I want to talk about the Florida real estate market and what's going on down there. So, if you're an investor in Florida, you probably are feeling the pinch of properties being on the market for longer than you would expect. So, in particular, I just pulled up St. Pete here. Um, so, I put a filter on. If I remove the filter on Zillow, so you see that there are 3,000 properties listed. I just put 90 days. Over half the properties have been listed for 90 days. Sure, if I go through these listings, there will be price drops of sorts. Let's take a look. Where are we at? Listed for sale. Okay, bad example. Let's try this one. You see a price cut 15K, price cut 59K, price cut 4K, price cut 20K, price cut 4K, so price cut 25K. So, presumably, if you're familiar with the market, it's bleeding down there. I mean, it's not. Sellers are not benefiting from this market right now. Okay, so what does that mean? Well, if you're a real estate investor, you have equity and capital locked up in your property. If you did a flip or something like that, you've got two choices to make. If you want to fire sale it or drop it so it sells, which in turn will affect all of the houses in that market, right? So if you sell a house much lower than market value, it's going to affect the houses in that neighborhood, and those are going to lose equity, yada yada yada. So, phone's ringing. Okay, so you get the idea, right? So if you're a real estate investor, what do you do in this case? You have two options. One, you refinance it, hold the value, refinance it so you can pull as much cash out and pray, although I think it's reasonable to say you're not going to get a 25% market decline, so you'll still have equity in the property if you pull a 75% cash out refinance, throw a renter in there, recuperate some of your mortgage payments while you kind of ride this wave, because presumably, if there's an adjustment in interest rates or something happens, no one can really predict what's going to happen moving forward, but you can expect there would be more market activity as the lower interest rates would open up the buyer pool a little bit. Obviously, there's those other costs like insurance and taxes that play into that, but insurance being the big one. But presumably, if the cost to borrow goes down, there would be increased activity. So your first option is throw a renter in there, cash out refinance with the DSCR loan, which we do, by the way, and you can get 75 to 80% LTV. Lock in your earnings so you can pull some money out, go reinvest while the property sits there, and just kind of understand that if you get a 20 to 25% market decline, you're going to be right up on that loan value. That's one option. The second option, which a lot of investors are taking advantage of, is what's called the bridge to sell. It is a refinance, but it's a short-term, no prepayment penalty type loan, kind of like a hard money loan, but not really. And again, it lets you lock in, basically lock in your winnings, go continue to the next house while the market figures things out. You can still throw a tenant in there. That's totally okay. You got to decide if that's strategically the right move, because if you got to list it on the market, then the tenant thing is problematic. So those are what Florida investors are facing. Those are the options that Florida investors are facing right now. Doing nothing is not the right move. Letting your loan mature if you have debt on it already, a short-term interest loan, that is not the move. And fire saling or dropping the price dramatically is not the move, because here's the deal, and I run into this a lot. People will drop their prices. I don't see any like crazy ones. I mean, the 50K one was a pretty big one. 10K. I mean, these aren't drastic, but I know they're out there. 25K. So here's what happens. A lender, if you decide to go refinance later, let's say you drop the price a bunch, it doesn't sell, and you want to go refinance, a lender's going to look at that list price, because you basically are advertising that the property's not moving at the value or the list price. So lenders are often going to cap the appraised value at the list price. So if it comes in lower, you can't recapture that equity until you sell the property. So the reason I wanted to shoot this video is to drive home the point that if it's even an option that you're going to refinance, keep the property at the price, go get the refinance done, close on the refinance, and then go ahead and drop the price. Like, go ahead and do that after the fact. Just do not do it before you close, because the lender's going to look at that as the value. Yeah, Florida is just getting hit. I mean, there's a lot of factors at play there. You know, you guys got some good stuff on the horizon with property taxes, but in the meantime, if you're looking for refinances, go ahead and reach out, and we'll see what we can do for you. Give me a call. Bye.